At last, a voice for the people who pay big government bills, not the people who make big government bills. You are listening to Speaking of Taxpayers, sponsored by the 362,000-member National Taxpayers Union. I'm your co-host, Pete Sepp.
And I'm your co-host, Doug Kellogg.
Welcome to this week's broadcast.
Well, tax day is past. Another tax season that was pretty rough on taxpayers, and NTU's annual study of tax complexity came out on Tuesday officially. We previewed it a little bit last week, but we have all the numbers in now. So, Pete, I think looking at this, I noted that things really have stayed pretty much the same as far as any big shifts in the cost of tax complexity. Even with Obamacare becoming further implemented, numbers are very similar. Do you take anything more deep away from this year's study?
Well, I think what we're going to see is a major jump in compliance burdens when things like the individual mandate begin to hit many millions of taxpayers. We have to remember that the new surtaxes, for example, associated with Obamacare are applying to upper income individuals. There simply aren't that many of them. And so if you are actually measuring the number of hours that the tax system is imposing in compliance burdens, you're going to have very few people with a lot more to worry about. And so when you're already talking about 6.1 billion with the B hours, and that's what we are talking about here, then that is not going to necessarily make a huge dent in the number either way. What will is when as many as, who knows, 5 million, 10 million taxpayers end up having to complete a worksheet or otherwise make some kind of compliance planning for the penalty they might have to pay if they can't show proof of insurance. That's the individual mandate, of course. Many of those provisions, the real killers in paperwork burdens, have been delayed for quite some time on businesses as well. So I think the next filing season is going to be the one where we're going to see major headaches associated with Obamacare. There are major headaches already, but again, for a comparatively confined number of people.
And I would imagine many taxpayers would feel like I did looking at the report, seeing the overall numbers trend down slightly, but with no real explanation as to why or any real effort on the part of Congress or any new rules or anything, any legislation simplifying taxes. It doesn't make you feel like it means anything for the next year. And now, as we're talking about some of the Obamacare pieces of Obamacare that will be implemented over the next year that will really affect the tax situation, it seems like one last calm, so to speak, year before the storm, or at least one more year of the status quo we've seen in the study since about 2010, where tax complexity is as expensive as it has ever been. It takes more out of the economy than it has ever before, but it's been a few years around the same total cost. And now it looks like it could just be worse. So this little year of a slight decline may not mean anything positive for taxpayers.
Well, yes, and we have to take into account the fact that methodologies of measuring this burden are constantly being adjusted. This has been a real problem for us in trying to establish an historical benchmark against which we can measure changes in, for example, the number of hours you might spend in preparing a tax return. It still remains somewhat of a mystery how some of these estimates are prepared, and without knowing what in the world the government's auditors are tweaking here when they put out these paperwork burden figures, it's difficult for us to say whether something has gone up or down in terms of total number of hours to comply with the tax system.
And that's interesting. So, and as we said, there's a very slight decline. So this shouldn't be viewed as some great savings year for the burden of tax complexity, because It went from its record high last year down to 224 billion. I've put together some charts over the past couple years which show that the cost of tax complexity just skyrocketed around 2010. Not necessarily the hour burden, which was already high and seemed to go up slightly before then, and then maybe it was catching up to that, and this a slight increase in the hour burden really can impact the cost, but we're talking about just billions upon billions of dollars, and so taxpayers really need that to get significantly better before anybody's going to smile too much. But aside from the larger numbers, there are a lot of more micro numbers that we look at in the study, things that might be a little more meaningful for the average taxpayer, things like the amount of time individuals lost, and what was about $280 of just out-of-pocket expenses per taxpayer for the average taxpayer. Not an insignificant amount of money when you think about, how the vast majority of taxpayers shouldn't have super complex tax situations.
That's right. The average cost out of pocket for using the 1040 long form, and apparently the IRS is projecting about 68% of taxpayers will indeed use that form, and they may or may not itemize and attach schedules, but the 1040 long form overall and any other items associated with it imposes an average of $280 in out-of-pocket costs, 15 hours worth of compliance. Now, here again is where we have to consider just how the government is estimating some of these paperwork burden hours, because if you take a look at the private sector, survey places like the Society of Accountants or the American Institute of CPAs, or perhaps the National Association of Enrolled Agents, many of them will tell you that they have much more complex situations of filing for clients that take multiple more hours and a whole lot more money than what we're talking about here. And in fact, you take a look at the average tax preparation fee. That is something that's a pretty decent indicator of where the out-of-pocket costs of the tax system are headed. And the average fee charged by H&R Block, according to its report to shareholders, and this was indicated on About.com, it was $198 in calendar year 2013, the most recent available. In 2012, it was $192. Well, $6 doesn't seem to make much of a difference, but here we have the National Society of Accountants saying that a 1040 itemized return with Schedule A, that's something that a lot of dual-earner households who might own a home and are paying a mortgage would file. The fee there, $261, according to a survey of their members, and that's an increase of almost 6.1% versus the previous year. That's a lot faster than inflation.
And one of the other stats we got, I believe this was cited in the AP poll, which we talked about last week, which we may have mentioned that over 90% of people who file returns are getting help of some type, whether it's tax software, H&R Block, as you just mentioned, or maybe they have a higher-end accountant. But basically what that means is over 90% of people who are filing returns can't do it on their own, and they have to pay something to get the job done in addition to what they have to pay for their taxes, which seems like an indictment of the tax system, if there ever was one, for the average payer. I mean, there's a lot of discussion, as we talked about last week with the Simplicity poll by the AP, of, how much does this affect people? Are people actually having problems? Some folks, maybe folks who, help people file these returns, is now it's a multi-billion-dollar industry. Maybe they think that that's not that big of a problem. How can you say you have a working tax system when people have to pay something
Yes.
in addition to their taxes to actually get them filed? That seems like a failure.
Yeah, it does. And in the sense that it's easy to prepare your taxes because all you got to do is write a check or put some tax preparation service on your credit card. Well, sure, it's easy for the majority of people. That doesn't mean it comes without a cost. And the costs are the things that we're trying to document here.
And as you framed, those costs are creeping up as the H&R Block fees continue to rise. So this is, it's something to take note of, that everybody, even if they aren't getting completely hammered by the tax complexity, the complexity of our system personally, that everybody basically has to pay something to deal with it. It's extracting another tax of its own on regular filers.
Well, yes, and we came up with this total cost amount of $224.3 billion a year in terms of what the federal, personal, and corporate income tax is imposing just in compliance burdens. Now, that represents about $193 billion worth of time. Now, we used the employer cost for employee compensation hourly average to calculate that, and almost $32 billion on things like tax software and other out-of-pocket costs. So when we break it down like that, we begin to understand that the tax system imposes a burden of compliance that is costly in its own right, over and above the burden of actually having to pay the tax burden itself. And so that's what's very important to understand here. The IRS often brags about how on a budget of, say, $12 billion or so, it collects several trillion dollars in revenues, very efficient, a fraction of a cent on the dollar that it's able to run its operations on for the money it collects. Well, that's because the collection and compliance burden is imposed externally on the rest of us. That's what this is measuring. That's what the $224 billion represents.
And the tax system is supposed to encourage voluntary compliance, and that's what the consequence of it is. And not that we want to have completely forced authoritarian compliance, but it means that the taxpayer is carrying the burden of getting that all set and done, and that cost is transferred into the economy. So let's talk a little bit about some of the statistics we came up with to put these burdens in perspective. Pete mentioned it takes 15 hours for the average person to file a 1040 long form, and we calculated that last year we did, I think, Harry Potter movies and Star Wars, and we had the corporate number in there with the individual number. So just individuals, they could enjoy the entire Dark Knight trilogy of Christopher Nolan Batman movies twice if they didn't have to spend 15 hours complying with their taxes.
Oh boy, and enough time for snack breaks, I imagine.
Yes, I think they would definitely fit in there. And also, we also just talked about the $280 out-of-pocket cost, which is enough for 151 tall Starbucks coffees. So God knows how many just standard bodega coffees that is, or Dunkin' Donut coffees. That is a lot of coffee, although probably a lot of taxpayers having to buy coffee in addition to funding their out-of-pocket costs just to stay awake and get their taxes done. We also put together some stats which regular listeners will have heard from last year about the tax code's length, as far as being, 7 times the length of War and Peace, 2 times the length of the King James Bible and the entire works of Shakespeare combined. And this year we also took note that it is over twice the length of the 5 released Song of Ice and Fire books by George R.R. Martin that are Game of Thrones TV show is based off of. More books known for being extremely long. So the tax code really is a heavyweight in terms of literary length.
Well, yes, and by tax code, we are only talking about the statutory law itself. Now, we need to understand there are 20 additional volumes of regulations that are roughly, that adds about another 2.5 times to the level of the tax code's number of words. So this is not just talking about statutory law here. When we add things like court rulings, administrative guidelines, and the like, the words just multiply. And of course, you'd have many more books equivalent to read than the ones we just talked about.
Certainly. So those are some of the stats we had that were updates of our stats from last year. I also noted that the 6.1 billion hours that it takes to comply, if you turn that into years, is 700,000 years. which is a lot of time lost. It also
Wow.
turns out that that is the age of the oldest known genome. So
Well,
the
what do you
tax code
know?
is not only at the edge of literary length, it is at the breaking point of genetic science.
Yikes. Well, there's another way to break down 6.1 billion hours, and that's in terms of an equivalent number of employees. In other words, if you took a person working a 40-hour week year-round with 2 weeks of vacation, how many people would work 6.1 billion hours total? Well, that's 3.05 million full-time employees. Now, what if that were a workforce? It would be staggering. We were able to do some comparisons with Bureau of Labor Statistics figures. We found 3.3 million work as cashiers in non-gaming establishments, pretty close to 3.05 million. Now, to put that into further perspective, cashiers is one of the top private sector categories for employment. So when we're at the 3 million figure, we're talking about some of the largest occupations in the country. This army of tax compliance, if you want to call it that, would therefore be among the largest occupations. And just by comparison, there are 3.03 million in building cleaning. That's not just janitors, but maids, part-time housekeepers. There are 3.02 million in combined food preparation and serving workers. And I think most tellingly, there are just over 3 million Americans right now working as elementary, middle, or secondary school teachers in non-special ed capacities. So if we value teachers so much in this society, we need to consider that our tax system is basically imposing the equivalent of a compliance workforce equal to that of teachers at the secondary and lower levels.
Last year around tax day, we actually got word from a CNET article, I believe, in particular, but this was covered by multiple media outlets, that the IRS is doing a lot more electronic monitoring, trying to create a profile based on your debit purchases all the way through your email, social media. And actually, after that blew up in the public eye, the IRS apparently made a promise to not do that for email, to not look through your email. But that was about it. So that's the news this year. The IRS might not dig through your email, but it seems like, what they view as, again, this is legal language when it comes down to what they'll actually do, as public communication on social media websites. Who knows exactly what is considered public on a social media website? It could be all communication on social media. That's not 100% clear to me at the moment, but they will look at all that going forward. So pretty much anything online outside of your email is still going to be worked into the IRS's monitoring program. Now, of course, this is done in the name of catching tax dodgers, but it does seem like an overwhelming program to run. This is an ongoing thing where they track your digital footprint and financial digital footprint in the name of catching a few people who are really doing wrong. So an interesting update, and I don't know if this will be the end of what we hear on this front.
Well, and it's a strange contradiction indeed when you have government agencies constantly expressing concern, as, for example, the Federal Trade Commission does about so-called big data, private companies storing just massive amounts of facts and patterns and habits of individuals, and the government objects because it has not necessarily a definable purpose, and it could lead to all kinds of invasions of privacy and other consumer intrusions. Yet the government itself is getting into the big data business big time. And the IRS, of course, would be an agency that could use this information to incredibly reckless ends. And I don't mean even intentionally. A bureaucracy that big, in control of that much financial data, which has had a history of data security problems, could create a lot of misery even without any kind of evil intention. That's what bureaucracies often end up doing. And in fact, the IRS's business systems modernization, which includes things like information technology, was only last year taken off the Government Accountability Office's high-risk list for waste, fraud, and abuse. So it's been years that the IRS has struggled with trying to keep its information technology not only up to date but secure, and subsequent reports from GAO and the Treasury Inspector General for Tax Administration show the agency still does have a way to go.
If I remember correctly, we had, maybe it was an Outrage, but we saw this year's story where somebody within the IRS, used their position to get access to personal information for people. It's certainly a big concern with identity theft, and digital theft is a big issue now. That if you have all this information stored, it could be potentially easier for somebody to steal your identity. Although if they're already on the inside in the IRS, they probably have plenty to do that already. But it doesn't give them a very good record to go on when we think about keeping your information safe. It's something that all entities that keep personal information now have a real challenge with, and the government isn't immune to that just because of the government. If anything, they could almost be a richer target for people who want to make sure they get useful information because they're going to have so much of it, and so in terms of the overall universe, and then also the amount of detail on people. So with this, they could really have everything on you. So when you have all sorts of companies from, I forget the recent retail outlet, we've had Sony get hacked, and Target,
yes.
All these companies, the IRS had somebody in the inside taking your information. It's something where you want to have any personal information just sitting around as a sitting target. I'm sure that's something we all think about as we buy and interact financially online more and more.
Well, yes, and of course, when you're interacting with a private company as a customer, at least you have some choices available to you as to what kind of data you want to share. Whether you want to share any, you could, in theory, go to a store and buy things in cash and remain private in your transaction, but you have to supply certain information to the government that is stored, and in many cases, you are compelled, if you're a business, for example, of a certain size, you're compelled to do online transactions with the IRS. You don't even have a choice of paper. And so, because we don't have a choice of how to interact with our government sometimes, or which government to use, there is a special responsibility on the part of policymakers to set an example.
And I think that, as you said, since we don't have a choice in the matter, we hope that whether any government entity, in particular the IRS, moves forward in a manner that is safe and puts the people they're supposed to be serving first, rather than just marches ahead with what's easier for them and what allows them to track down money as their lead goal. If that's what it's about, is we talked about the Taxpayer Advocates report this year, where the IRS admitted the Taxpayer Advocate admitted the IRS was pursuing collections from people that they knew didn't owe them. There was some kind of mistake, or the case was dismissed, whatever, and they keep pursuing payment. So when you see, to me, that's one of the things that really stands out as a motivational concern for the IRS. So when they go forward with gathering people's information and building social media profiles, it seems like maybe it's done with that side of the IRS brain, in looking for money first and thinking about you and your personal information second or third.
Yeah, and this is one of the undercurrents, I think, that's carrying along the idea of another taxpayer Bill of Rights. We discussed this as well when talking about the Taxpayer Advocates report, and it's directly linked, I think, to the issue of complexity. In fact, those are several of the planks in this Taxpayer Bill of Rights that the advocate is suggesting: the right to be informed through, quote, clear explanations of the law and IRS procedures in all tax forms, instructions, publications, notices, and correspondence. Also, the right to quality service, such as clear and easily understandable communications from the IRS. Boy, that's a pretty tall order, but I think it's one that we could start from in helping to address some of this systemic complexity. Yes, there are many things we can do with the law, and you've heard a lot of those ideas on Speaking of Taxpayers, from a fair tax to a flat tax, this tax reform draft that the Ways and Means Committee has put out for discussion. But the IRS may be able to take administrative actions in the here and now to do things to reduce complexity if they have the will to follow through. And the taxpayer advocate has been very constructive in this regard.
Well, as we moved towards the end of the podcast, let me give credit to CNET, who actually wrote the article that we're updating this year, as well as the article that broke this news to us, at least last year. Derek Kerr this year writing for CNET on the IRS and social media issue. As always, you can go to ntu.org to read the full tax complexity study, which we encourage you to do. You can also check out some of the news stories on it in the Washington Examiner. Paul Bedard wrote about it. Jennifer Harper in the Washington Times, keeping everybody up to date on this, and as well as a number of outlets where you hopefully have seen it, maybe even places we didn't notice. But it's all available online if you want a little bit more of insight into what the report showed. But definitely, it is a longer report, but it's something that active taxpayers can definitely read. It's not that difficult to read, and there's a lot of interesting information in there. So going forward, Pete, this is a problem that doesn't seem like it's about to get any better. If anything, next year we might expect it to get worse. We talked about Dave Camp's tax reform plan, which seems like at least a positive step towards simplifying things a little bit. What should we expect next on this front, and anything to alleviate the problem?
Well, I think in addition to the advocates' taxpayer Bill of Rights, we could establish processes that would start to weed out some of the dumbest and most offensive portions of the tax code. There was one suggestion, for example, from the old IRS Restructuring and Reform Commission back in 1997, and we served on that commission, to establish a quadrennial simplification process. Every 4 years, leaders in the government, even the Treasury Employees Union, the tax practitioner community, taxpayers themselves would engage in a structured procedure to try and weed out the most complex portions of the tax code that were not serving the public interest. And some, if they involved revenue losses, of course, might have to be approved by Congress. Others just might be procedures that could be substantially improved without any kind of statutory intervention. So that's one thing we could do. I'd say another thing would be to require a tax complexity analysis in detail to be appended to every single piece of tax legislation introduced in Congress. The Joint Committee on Taxation sometimes does this and provides an overview and an opinion on how a given proposal on the tax system would affect complexity overall. We need to institutionalize that and strengthen it.
It's time for the outrage of the week. This week's outrage coming to us from the Washington Free Beacon. An AmeriCorps agency ignored the White House's efforts to reduce waste, fraud, and abuse. This is interesting. Even the White House can't get the bureaucracy under control. The Corporation for National and Community Service is apparently in non-compliance with the White House's orders, and they dish out $750 million in grant money per year. But what the Inspector General has found is really interesting, Pete.
Yes, it appears that for the third consecutive year, the Inspector General of AmeriCorps has said that the agency is not in compliance with the 2010 Improper Payment Elimination and Recovery Act. Now, this is strange. I still have a hard time believing it. Apparently, AmeriCorps claimed that in fiscal year 2011, the only improper payments it recorded were $2.14. Now, if that is true, and I still have a hard time believing it, the Inspector General does as well. They called the projections, quote, on their face, unreasonable, unquote. Why? Well, here's an interesting little tidbit from the report. Apparently, AmeriCorps reached the results because, quote, it failed to examine whether the expenditures were used for their intended purpose, a key criterion of that improper payments law. Wow. So, that seems to be sort of accountability 101 in the
That
real
seems to
world.
be the main criteria for figuring out if you were making improper payments, but they're going to go ahead and ignore that. Apparently, the people on their list got the money, and that's pretty much all they're concerned about.
Well, yes. Now, the Inspector General was able to piece together a few things from all of these records and figures that there are at least 10 million in potential improper payments, but the reliability of that estimate is just very difficult to ascertain, and the IG believes there's a lot more money being doled out improperly, especially since, of course, AmeriCorps was supposed to have what's called a statistically projectable review of costs incurred by grants. So that would help them in determining what was improper and what wasn't, and AmeriCorps has not done that either. And core problems like these are why AmeriCorps is the outrage of the week. That about does it for this edition of Speaking of Taxpayers. Remember, folks, you have the power to fight the power if you speak truth to power, and we speak truth to power every week here on Speaking of Taxpayers. I'm your co-host, Pete Sepp.
And I'm your co-host, Doug Kellogg.
So long.